Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nikki Mirchandani. Well, Indian equities lack direction at this point of time amidst mixed global cues may consolidate for yet another session out there. SGX Nifty at this point of time is indicating a positive start coming in for Indian equities. Wall Street, however, closed lower as the focus shifted to inflation data and debt talks out there. Asian Pacific at this point of time, they too have got off to a cautious start as investors look ahead for cues on the path ahead for US Fed Reserve move out there. In terms of FII data, they've gotten shares to an extent of around 1,942 odd crore. And if you talk about the DII trend, they have too been buyers and have purchased shares worth around 404 odd crore. Nexus Select Trust REIT IPO, that's been subscribed 28% on the first day. So that's one that we're going to be looking out. Mankind Pharma, as you know, solid debut made yesterday with gains of more than 30% on that one. In bunch of earnings that we'll be tracking today will be L&T, Dr. Reddy's, Godrej Consumer Products, Bosch, P&G, Escorts and Sanofi India and Max Financial Services too would be in focus as they report in their March quarter numbers. For L&T, expectations are better execution to boost Q4 top line and large order wins is expected to raise the margins higher for the giant out there. But let us get going and discuss some stocks and strategies with Rajesh Palviya, Senior Vice President Research at Axis Securities out there. Good morning there. Rajesh, we are witnessing some amount of consolidation which is taking place for Nifty out there. A bit of breather that has come through for Nifty yesterday, a pause if I may so say. Do you think the bullish trend will continue or this is a pause ahead of the direction which reverses anytime soon? What's your assessment and the strategies out there for our viewers?
So overall, if we analyze the Nifty, it's in bullish territory. Yes, some profit taking was there at high level, but still, if we analyze the overall data setup, it clearly indicates that until Nifty not breaks below 18,200, 18,150 level on a decisive basis, it will remain under buying interest is going to continue further. Once Nifty manages to cross over 18,350 mark, then this really can extend further higher, and then we are predicting target of 18,500 in the continuation of this uptrend. So overall setup for Nifty is on the bullish side only. Yes, some pressure is there, some resistance is there at around 18,300 strike because most of the call writers are betting on for this strike. But looking at the overall setup, sectorial rotation, the sectors which were underperforming now contributing to support the Nifty, that clearly shows that this trend is going to continue further on the bullish side only. So we are having our buy on dips kind of strategy at this juncture. And to play this upward momentum, we are initiating here to buy 18,300 call option, which was closed at around 47, 48 rupees. One can buy this option for upside target of 85 to 90. And a stop loss to buy this option is at around 30 rupees. So we are holding bullish view for Nifty, and we expect that this breakout is likely to happen in near-term basis.
All right, so that's the bullish view coming in and breakout, which is expected to happen anytime soon. Let's also talk about Bank Nifty. Excuse me. What's the strategy out there? A bit of resilience and the outperformance has come in from Bank Nifty thus far. You think bulls are active out there itself? And if yes, what's the immediate resistance level that we have for Bank Nifty right now?
So Bank Nifty is struggling to cross its immediate resistance area of 43,500, 600 zone. And this is second attempt where Nifty failed to cross those levels. But looking at the overall structure, it's still in bullish territory as we are holding 43,000 level, 42,800, which is the near-term support area for Bank Nifty. So until Bank Nifty not breaks below 42,800, the trend is going to remain on the bullish side. Once Bank Nifty crosses above 43,500, then this really can extend further higher towards 44,000 mark also. So overall Bank Nifty setup is also bullish, and we believe that some long unwinding was there in the previous trading session. But overall, if we look at the cumulative data setup for this series, the bets are on the bullish side, and sooner or later we expect that this breakout will happen, and then Bank Nifty can head further higher towards 44,000 level also. So our stance is buy on dips for the bank Nifty also. Keep your stop losses at around 42,800 to hold your long positions.
All right, so that's the word coming in on Bank Nifty. Bullish stance has been maintained even on that one. So that's clearly some of the strategies out there for Nifty and Bank Nifty. But there are a bunch of stocks that we want to address this morning, which includes the like of Lupin, Godrej Agrovet, Apollo Tyres, Nazara Technologies, and Eveready Industries. There are a bunch of earnings out there that we'd like to highlight. But Lupin first, where the numbers have been really encouraging. Revenue up by 14% to a number of 4,430 odd crore, as compared to an estimate which is in line with most of the street estimates out there. EBITDA, it's grown by more than 150%. 604 crore is the number. Expectation was to an extent of 491 odd crore. So do keep an eye out on this one. And net profitability too has been reported at 235 crore as compared to the net loss. So it's the fourth consecutive quarter that we're seeing that profitability boost coming in for Lupin. So that's clearly one counter that we all will keep an eye out on. It's also announced a dividend of rupees 4 per share. IndusInd Bank, there's an upgrade coming in on IndusInd Bank, and the stock has been on quite a run after the sharp correction that it witnessed, midweek yesterday, midweek the previous week, somewhere on Thursday, after which we saw some amount of rally coming in for IndusInd Bank. And yet again, there is UBS, which has gone ahead and upgraded the counter and has revised the target price to 1,450 per share. Right now, the stock is quoting around 1,100 levels. It says that the high PPOP to asset ratio is around 3.4%, which is expected in 24 and 25, financial year 24-25, which is way higher as compared to 2.7 to 3.2% for the private payer, which means that this could translate into higher ROAs coming in, given the kind of decline in the credit cost also. We've spoken about the valuation being at 1.4 times. It's FY24 book value out there. So that's also one of the valuation matrix, which is below its 5-year average. So that's clearly an interesting one. Apollo Tyres. Yet again, good set of numbers reported by Apollo Tyres. Now, do keep an eye out on this one. The revenue is up by 12% and it's to a number of 6,247 odd crore. Now, Street was working with a number of 6,200 crore odd. So it's pretty much in line with what the Street was estimating. But operational performance, on the other hand, that was also in sync with most of the expectation. Expectation was to an extent of 919 odd crore, and the company has reported a number of around 998 crore. So we're seeing a 59% jump coming in on the operational performance of this one. The margin is at 15.9% as compared to 11.23% in the corresponding quarter, and net profitability that is also shot up. It's zoomed 427 crore. Now the Street was working with an estimate of around 315 odd crore. So we're seeing that bump up coming in on the bottom line performance, and also operational performance pretty much being a little higher than the Street estimates out there. So the board has recommended also final dividend of rupees 4 per share. Eveready Industries, that has also reported a good set of numbers. Revenue up by 19%. The company has reported an EBITDA profit of 1 crore as compared to an EBITDA loss of 35 crore in the corresponding quarter of the previous year. So you can see that there is a beat coming in on account of the operational performance. Is a break even coming through. Net loss is narrowed to narrowed by 62%. That's also one parameter that we need to. The net loss has been narrowing. Beg your pardon, not a percentage involved there, but the net loss overall has been narrowing down for the company out there. Godrej Agrovet. That's again a little bit of disappointment creeping in on that one. Revenue is up just by 1%. If you talk about the EBITDA performance, it's down by 56% out there. If you talk about the net profitability of the company, that again is down by 74%. So net not really an encouraging set of numbers, be in terms of the estimates, be in terms of just on the face of it, they're not a great set of numbers out there. So Godrej Agrovet might just expect some negative reaction coming on that one. So to keep an eye out on Nazara Technologies as well. Now, this gaming company, if you talk about the performance just on the face of it, doesn't look like a healthy set of performance coming in on that one. The revenue is down by 8% to a number of around 289 crore. Now, this is based on the sequential performance of the company. Estimates were to an extent of around 296 crore. EBITDA is down by 26% out there to a number of 11 crore, and the margins, they've shrunk to 3.8% as compared to 4.8%. And even in terms of the bottom line performance, there's a hit coming in on that one. 84% at a number of around 2.6 crore as compared to the estimate of 16 crore which was expected. So these are net the earnings that we are looking at. Good set of numbers, bad set of numbers, upgrade coming in for IndusInd Bank. But Rajesh, I'm going to come in on on this one, and I'm going to check with you two profitable bets that you have for our viewers before we address the markets open out there.
So AU Bank is one stock where we feel that bullish momentum is likely to continue further. Stock is approaching to its multiple resistance zone area, and looking at the long built up in the previous session, we believe that AU Bank can be a stock one can buy here for upside target of 737.35. Keep stop loss of 685 to buy AU Bank. Second stock is that is Alchem Lab. Stock has shown very strong buying action, series of higher top, higher bottom formation on daily chart. Looking at the overall setup, we believe that Alchem Lab can continue further more higher momentum, and we are projecting target of 36.90, 37.40 on the higher side. One can buy this stock with stop loss of 35.85.
All right. So that's the view coming in, Alchem Lab and AU Small Finance Bank. So these are the two bets that Rajesh has for us in the morning out there. But beg your pardon. Looks like it's a good start coming in for Nifty right now. We are looking at gains of around 0.2% out there for Nifty. 18,300 mark. That's been retained out there. Bulls seem to be active at this point of time. Might we be starting for at least a cautious start, if not for an extremely positive one. But looks like bulls are not in the mood to give up just as yet. Bank Nifty and the mid cap and the small cap performance out there. For Bank Nifty, we're looking at gains coming to an extent of around 0.2% out there. 43,250 mark. More than that, it's trading well above that level out there. If you talk about the mid cap index and the small cap index, mid cap index has been holding up for you with gains of around 0.2% out there. And if you talk about the small cap index out there, that is also holding up with gains of around 0.2% out there. In terms of sectoral indices, let's look at the performance there and see how the trend has been stacking up. Overall, for metal, we are looking at gains of extent of around 0.3% out there. And in terms of the other sectoral indices that we have, something in the like of FMCG, something in the like of realty, well, that's holding up with somewhat positive bias coming in for FMCG overall. And in terms of the realty index, that also is holding up in green with gains of around 0.2% out there for real estate index right now. In terms of pharma, holding up their head in green, neck in green with gains of around more than 0.1% out there. In terms of the other sectoral indices that we have on our list right now, IT index with gains of around more than 0.25% out there. Market breadth right now is in the favor of advances. 40 advances versus 10 declines coming in for the markets right now. So market breadth yet again is skewed in the favor of advances out there. Let's also talk about the top gainers and the top losers that we have on the list right now. IndusInd Bank, Tata Motors and Power Grid. These are the top three gainers that we have on the list. We did address about the UBS upgrade coming in for IndusInd Bank, and it is the gainer, one of the top gainers for yet another session. Bajaj Finserv and Bajaj Finance, Bajaj twins essentially, are other top gainers that we have on our list. And L&T out there, that's the one which is going to be reporting in the numbers today, and you're seeing that stock holding up way ahead of its numbers out there. UPL, some amount of dropping coming in on that one after the numbers have been reported. Tata Consumer Products and SBI. These are some of the top losers that we have on our list right now. Grasim, HDFC and Asian Paints. These are some of the losers that we have. DRL, HDFC Bank and NTPC out there. These are some of the losers that we have on the list right now. Also, these are, IndusInd Bank, I'm not really surprised out there, but Rajesh, I'm going to come in on this one and check with you. What are the charts indicating of IndusInd Bank right now? Do you see more traction building in and further steam to this counter, or you think the rally has been sort of overdone with the kind of drubbing the stock witnessed previous week?
So Nikki, stock. Yeah. So Nikki, stock is now approaching its immediate resistance area, which is at around 1165. If stock manages to cross above 1165, then possibly IndusInd Bank can extend its upward momentum. Though we have seen recovery since last 3 trading session, and now stock is holding above its 20-day, 50-day moving average. We believe that this momentum can continue further higher towards 1190 to 1210, which could be the immediate target for this stock. So one can buy and hold this stock with stop loss of 1140.
All right, so that's the word coming in on IndusInd Bank. Rajesh, we're going to leave it at that. Thank you so much for taking out the time and speaking to us this morning. We're next going to hit our conversation to the fundamental story. And to join us to take the discussion forward is Chintan, Haria, Head Investment Strategy, ICICI Prudential Mutual Fund. Good morning there.
Good morning, Nikki.
It's after a long haul that we finally managed to have a conversation out there for you. Right now, bulls seem to be holding up, and we're seeing gains coming in for the markets. Just a breather of sorts in between, and the bull run continues. FIIs have raised their equity holding in small cap stocks to a 5-year high. That's the latest that we have in terms of the quarterly holding pattern. So out of the three, where do you see more traction building in on a very aerial level that we are asking the question? You seeing more traction building in for the broader markets, or you seeing larger counterparts doing well? What's your assessment?
So I think all 3 segments from where we are starting right now should do well. We've seen small caps correct from October 2021 to now by almost 15%, while the broader markets have been flat. Both the large cap and mid cap has been almost flat, but small caps have seen a correction of almost 15% in the last 18 months or so. Of course, India being a market which has seen massive strides in terms of new listings, in terms of the variety of sectors that is on offer. And the great news is that last 12 to 18 months, the India story is truly shining. If you look at the last 12 months, and that's been our call as well, that the domestic consumption stories, capital goods, auto, banking, whatever it has to do with India is probably likely to do well. And that's what has happened. And the international stories like pharma and tech have underperformed as expected. And if you look at the latest numbers of GST as well, of 1.87 lakh crores, that's an indication that the boom is there. And anyone who is, and it's May, it's travel time. If you go out and see what's happening in terms of travel and tourism as well, you know that India is live and kicking. So essentially, we believe that large caps will do their bit in terms of capturing a large part of the market growth. But there are enough opportunities in mid and small caps also after the correction that we've seen in the last 15 to 18 months. So all 3, if you have the right stock selection mechanism, should do well for investors.
All right, so that's pretty aerial view out there, but let's actually further drill down our, narrow down our expectations or the conversation that we have overall for the pharma sector overall. You said that's probably not the sector that looks attractive. Mankind Pharma yesterday, there was a solid set of, debut which was made by the company, 32%, 35% or the premium on the first day of the listing gains out there. Overall, this counter along with the pharma space, do you think the valuations look a little bit attractive given the kind of drubbing that has come through, or you completely want to stay off the sector overall?
So we've started being constructive on pharma for the last 6 months or so, 6 to 8 months. And the reason behind that is twofold. One, if you look at the raw material prices of pharma, that started to come down. So the input costs come down, as well as if you look at the prices or the drug pricing authority, there's been a 12% increment which has been given, I think, to the pharma companies for the regulated prices which are there. So both in terms of price uptick and cost coming down. Incrementally, the domestic focused pharma companies should get the benefit of that. And after, like you mentioned, the underperformance of pharma for the last 1.5 years, after the massive rally that we saw during COVID, that sector definitely looks something which you can accumulate. And if you forget the 6 months, 12 months, past 12 months and next 12 months, and you look at a broader picture, 141 crore Indians going to 160 crore Indians by 2050, we are going to need a lot of medicines. And not just us, India is the pharmacy of the world in terms of our exports. Also, we are the largest exporter of pharmaceuticals. This sector you cannot ignore from a long-term perspective, and hence after this correction, we are very constructive on pharmaceutical space. And over the next 12 months or so, if you accumulate and keep it for 3-5 years, this sector should do well for investors.
Sure. I mean, I'm sure you're not going to like really drill down or be stock specific at this point of time, but I'm just going to take a chance out there and check with you your understanding on Lupin per se, because it's reported really good set of numbers. And if you talk about the performance out there, the stock still needs a massive re-rating to go anywhere close to that 1,230 sort of levels seen 2 years ago. This looks more of a long-term story if Lupin gets the act right. But overall, within the space, what do you like? Do you like Lupin? Do you like what's your assessment in terms of since you have turned constructive on the pharma space, which are the stocks that one could be looking out, or specifically segment within the pharma that we can be looking at?
Sure. So our holdings are pretty much publicly available, and without going stock specific, essentially, if you look at it, we do have large positions in some of the pharma names which you mentioned. But the point being, with input costs coming down, like I mentioned, and the pricing being higher for the regulated entities, plus the underperformance, all three are normally a good setup for a sector to potentially do well over the next 12 to 24 months. And within that, the domestic focused pharma companies, which have a large India business, that's what we have been preferring. And we do believe that irrespective of a global recession or not, people are going to need a lot more medicines. And with let's say pricing power better for the pharmaceutical companies, plus the fact that within India itself, the ability as we move towards a 50 crore middle class over the next many years, the ability to pay for medicines is also going to improve meaningfully. So I think the top line and bottom line of pharmaceutical companies should get a good support for the long run. So this sector, as it has been, so technology last 30 years, pharmaceutical last 20 years, maybe chemical last 10 years, all these three sectors going forward as well look quite interesting from an investor perspective.
Sure. Chintan, I'm just going to ask you, where has the fund house really turned the rating or the tides now in the last 1 to 2 months, and specifically after the earnings have been, most of the companies have reported their earnings. You talk about the FMCG basket, we are seeing that momentum building up, but the volume growth still remains to be in that single digit out there. But fairly decent set of numbers reported by most of them, barring HUL and Dabur. So A, the first question is your assessment on FMCG, and B, you said India growth story, something like capital goods, auto and banking is where the momentum is. But after the numbers have been reported in this earnings season, is there any sector which has stood out for the entire fund house where, the fund house now wants to be constructive on?
So if you look at from a numbers perspective, at a broad level, we've seen a close to 8% QOQ growth on numbers so far based on reported numbers. And on that basis, on forward basis, we are at 18.5 times on valuations, which is not very expensive relative to past. So we were expensive in 2021 October. Now we are not that expensive. We are not very cheap either, but we are more reasonable in terms of the growth expectations that we have. In terms of sectoral numbers, if we look at it, the largest being banking and financial services as a sector, that's reported good numbers. And we do believe that with the NPA cycle now low and the fact that there is a growth in or capex pickup which is happening, mainly led by the capacity expansions in manufacturing, defense, electronics, there is a very high probability that banking as a sector, which probably has also seen a lot of FIs selling in the last 4-5 years. Let's remember, FIs have been consistent sellers in India over the last 2.5-3 years, and that obviously their highest ownership is banking. So that has seen a pain, but that is turning, like you mentioned, and we do believe that when FIs come back eventually, now with the Fed turning in terms of its interest rate hikes, there is a chance that in the next 6 months, 8 months, we see FIs coming back already. March, April, May, so far. You also mentioned about yesterday FI numbers being positive. March, April, May, FI numbers have been positive. Rare that 3 consecutive months FIs have been positive in the last 3 years. But if you look at that trend and that continues, banking should be the default beneficiary. So we were constructive on banks, and we continue to remain constructive on banks going ahead as well. Because if India has to grow from $3 trillion to $5 trillion as an economy, banking as a sector should job. The other parts of the market in terms of numbers, where we've turned even more constructive, is the manufacturing piece. Bit by bit, with all the regulatory changes and the taxation changes which have happened, plus the China plus one and Europe plus one, which we've seen, manufacturing as a sector, which had lost its charm over the last 25, 30 years because of competition from China exports, is definitely looking a sector which can drive us in the next maybe 5 to 10 years. So we had logistical bottlenecks, we had taxation bottlenecks, we had probably power and logistics bottlenecks. All of that has been basically now bit by bit solved to a large extent by the government. And over the next 7, 8 years, we do believe manufacturing as a sector will do well for investors. And that is already reflected. If you look at the capital goods numbers, if you look at the manufacturing numbers, that is reflected in the better margins, better numbers, better growth for domestic India manufacturing, and which is a hearty sign because we need manufacturing to also fire for our job creation in the long run.
Right, point well taken and also well explained when it came to the FI and the banking logic out there. Sure, let's, in terms of just the banking sector, PSU banks also reported great set of numbers, but big beat came in from the private sector banks, specifically ICICI Bank, which pretty much fired all the cylinders when it came to the numbers out there. Between the two, what do you like?
So if we look at both PSU banking and private banking, both, like you said, in terms of the changes which have happened, in terms of the consolidation which has happened, we believe that both have a space to grow. Private banks have grown from being less than 10% market share about 15, 16 years back to probably more than 30%, 35% market share now. That trend should continue because access of private banks to capital is quite, it's probably more easier than some of the PSU banks which are now consolidating, except for the largest PSU bank. So if we look at from a growth perspective, the headroom for private sector banks seems to be faster, but as things stand today, both private and public sector banks should do well, keeping in mind that last 12 months to 18 months, public sector banks have been the best performers. Maybe they will take a pause or a breather, but essentially, if you look at a landscape for next 3 to 5 years, both public and private sector should do well. Private sector, because they will continue to gain market share, probably is slightly better than the public sector in terms of the banking, but nothing much to choose in terms of both.
All right, Chintan, you've pretty much spoken enough and more about banking, manufacturing, but at the cost of reiterating the question that I just asked you, one sector that took you by complete surprise in this earnings season and stands a stance of re-rating out there, one particular sector just for you.
So I think pharma sector should, with the initial numbers that we've seen in pharma sector, that's a sector which has positively surprised, and hopefully that gains traction also. Pretty much in terms of earnings season, whatever we expected, it is in line with that. There are not much surprises. If you spoke of FMCG doing well versus technology, just one data point. In the last 12 to 18 months when technology was taking on a beating, FIs in fact have sold more than 1 lakh crores of technology, and that money has shifted to FMCG. And so the FMCG index has done exceedingly well, like you mentioned, while technology has taken a beating. So while FIs are becoming lesser prominent because DII holding in India is significantly higher now, but still from a sectoral standpoint, they've been able to impact the technology sector versus the FMCG sector through the shift that they've done in the last 12 months. So earnings season, so far so good. Whatever we've expected has happened. And specifically, like I said, the manufacturing sector has seen quite robust numbers, and we continue to believe that should continue in the next maybe 12 to 18 months as well.
Chintan, within the IT space, mid-cap IT counters, they came up with solid set of numbers in this quarter, but most of the outlook suggests that vendor consolidation may take away and make these players more vulnerable to the global cues out there. If you are bullish within that space, you've spoken enough about not being that constructive enough on the IT space per se, but if you were to choose, which is the segment that looks attractive at this point of time? Is it the mid cap or is it the large cap?
So if we look at IT sector per se, and in mid caps, there are many specific stocks or sectors which have mid cap stocks which have drivers which are different and individual depending on it being a single product company or a large single client. But if we look at IT sector in general, We've seen in the past history that at 25, 26 times it kind of peaks, which is exactly what happened in the last 12 months or 18 months, where it peaked at 26, 27 times earnings. It's come down to 20 times forward earning, which is reasonable, not expensive. But to have more comfort, probably you need to build IT sector weightage over the next 12 months, because at least the large cap companies, they, because of the ability to do buyback and they being cash rich in general and the ability to generate cash, they should provide support to the market sometime in the near future, because the valuation de-rating has been significant there. So while we weren't constructive on IT in the past, today, if you look at it from a starting standpoint, they should also start giving support to the market. And like I mentioned, the international piece was something which was a painful part, IT sector being driven by Europe and US majorly. If you look at, in fact, European markets, they've stabilized meaningfully. The last 12-month returns, both in France and Germany, if you look at it, has been positive. I think they are the best performing markets. With probably the commodity prices, especially the natural gas prices being stabilized, if Europe does bounce back, we don't know, we're not sure. And if US kind of stabilizes, then the IT sector can again be in, of interest. And when FIs come back again, there's a high chance that they may come back in IT also in the next 12 months or so. So probably next 12 months is a good consolidation come accumulation phase for those who are looking at IT sector. We do believe that it's a good time to start accumulating. At 20 times forward, it may not be so cheap as such, but as we move ahead and earnings grow, you may find that at 17, 18 times earnings, IT sector becomes attractive relative to market.
Sure, that's the word coming in on the IT sector. So pharma and IT is something that we need to watch out for once the FIIs are back on the table out there for Indian equity markets. But Chintan, thank you so much for taking out the time and speaking to us.
Thank you so much, Nikki.
Pleasure. Well, with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching, and please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.